Okay, so welcome to the deep dive, everyone. Today, we're diving into President Trump's tariffs on global imports.
Yeah.
Big topic. And we're going to be looking at this Motley Fool article.
Okay.
Seems to lay out a lot of what's going on here, so...
And for everyone listening, in this deep dive, our goal is to break down the tariffs for you, like who they affect, when they're going into effect.
Right, yeah.
And what it all means for investors and, regular people like us who buy stuff. We know you want to understand this quickly, so we'll get to the point and avoid any, complex financial jargon.
Yeah, we want to keep it nice and simple. Straightforward for everybody.
Okay, so let's start with the announcement itself.
All right, so President Trump, on Wednesday, April 2nd, 2025, called it Liberation Day. That was his name for it.
Interesting.
And he said there's going to be a new 10% tariff on imports from every country.
Wow.
But there's a big exception right away, goods that are compliant with the USMCA.
Okay, so a broad tariff, but with a specific exemption for our North American trade partners, right?
Yeah, under that agreement.
Under the USMCA.
Right.
But there's more to the story, right? The article mentions that some countries are going to be hit with much higher tariffs.
Yeah, that's right. So on top of that 10%, there are about 60 countries that President Trump called out as worst offenders.
Oh, wow.
These are countries that the U.S. says have really high tariffs on American goods. And as a result, they're going to face these much higher tariffs, what they're calling reciprocal tariffs.
Okay, so just to be clear, these reciprocal tariffs are how the U.S. is responding to what it sees as unfair tariffs placed on American products by other countries.
Right.
The goal seems to be to even out the playing field in trade.
Right.
And this is where it gets really interesting when we look at the specific numbers.
Yeah. So can you tell us a little bit more about which countries are included in this category and what kind of tariff increases they're looking at?
Sure. China is a prime example. They're facing a brand new tariff of 34%.
Whoa.
But here's the thing. This is on top of the existing 20% tariffs. So in total, goods imported from China are going to have a whopping 54% tariff.
Okay.
Think about things like electronics or clothes, which we import a lot from China. These are the kinds of products where that 54% increase could really mean a much higher price tag.
Yeah. So it's a substantial jump, isn't it?
It is.
Are there any other countries that are facing these really high worst offender rates?
Yeah. Cambodia is looking at a 49% tariff rate.
Wow.
And Vietnam's close behind at 46%. Even the European Union is going to have a 20% tariff on their goods.
All right.
So it's a pretty big change affecting a lot of different countries.
Yeah, it really is. It seems like it's impacting most of our trading partners. So what about Canada and Mexico? We have the USMCA with them. Are they completely exempt from these higher tariffs?
Well, not entirely. They're not considered worst offenders, but the article explains that any goods from Canada and Mexico that aren't compliant with the USMCA will still be subject to a 25% tariff. So the key for them is to make sure their goods meet those USMCA standards.
Right.
And another important thing is the pause on tariffs for cars made overseas is over. It's lifted for everyone.
Okay, so we have this system where different countries have different tariff rates, and then Canada and Mexico have to follow the trade agreement rules. Can you remind us, in simple terms, what USMCA-compliant really means?
Sure. So basically, it boils down to where the goods are primarily made or transformed.
Okay.
It's about what percentage of a product's parts and labor come from the U.S., Mexico, or Canada.
I see.
That percentage has to meet a certain level for the product to get the benefits of the USMCA.
Okay, that helps clear that up. So for everyone listening, the big question is, when do these new tariffs actually start?
Well, according to the Motley Fool, they're going into effect pretty quickly. The tariffs on foreign-made cars start first at midnight on Thursday, April 3rd.
Wow, that's really soon.
Yeah. Then the general 10% tariff kicks in on April 5th. And those higher specific tariffs for the worst offenders start on April 9th.
So businesses really don't have much time to adjust to all of this.
Right. The article makes that point, too. And we're already seeing reports that big retailers like Walmart, Target, and Costco are talking to their suppliers, especially in China. They're trying to see if those suppliers can absorb some of these new tariff costs.
That makes sense. They're huge companies with a lot of influence.
Yeah.
But what happens if those suppliers can't or won't take on those extra costs? What does that mean for us, the people buying things?
Well, the article suggests a couple of possibilities. Retailers might have to raise their prices to cover those increased import costs.
Right.
And with inflation being a concern, that could put a strain on people's budgets.
Yeah.
The other possibility is that retailers decide not to raise prices too much, but that means they have to absorb those costs themselves.
Okay.
And that could really squeeze their profit margins, which are already pretty thin, often just a few percent.
Right.
So what does this mean for you and me?
Yeah.
It probably means we'll start seeing prices go up on a lot of the things we buy every day.
So a pretty direct impact for a lot of us. Now, the article also talked about the end of something called the de minimis exemption. This seems like another change that could affect consumers, especially those who shop online for cheaper items.
Yeah.
Can you explain what that exemption was and why getting rid of it matters?
Sure. The de minimis exemption was a rule that allowed items worth less than $800 to be imported without having to pay any tariffs.
Okay.
This has been really important for all those low-cost goods we buy from Asia, particularly through websites.
Right, right.
But starting on May 2nd, that exemption is gone.
Wow.
So what that means is those inexpensive things you might buy from sites like Shein or Temu, which is owned by PDD Holdings, those are now going to have that big 54% tariff applied because they're coming from China.
Okay.
So if you shop on those fast fashion sites regularly, this change could really make a difference in how much you spend.
So those really affordable clothes and things you get online might not be so cheap anymore. That's a big change for people who depend on those options.
Exactly. The article even mentioned that Shein has claimed Temu was already selling many of their products at a loss.
Oh, wow.
So with these new tariffs, these companies might have to raise their prices significantly. It's interesting, the article also points out that Amazon might actually benefit from this change. Remember, they launched that Amazon Hall store last year, which is aimed directly at competing with Shein and Temu. So without the de minimis exemption, things might become a bit more even for Amazon in that low-cost market.
So it sounds like there could be a pretty significant shift in the price of goods, especially those coming from certain countries.
Yeah.
Now, let's switch gears a little and look at this from an investor's perspective. The article has some insights for those who might be wondering what all this means for their investments. What's the main takeaway from the Motley Fool's analysis?
The main message is don't panic. The article emphasizes that while these tariffs are definitely going to cause some problems and might even affect profits for a lot of companies in the short term, they might not be permanent. President Trump is known as a deal maker, and the article suggests these tariffs might be a way to negotiate rather than a long-term strategy to hurt American businesses.
That's reassuring for investors.
Yeah.
So does that mean people shouldn't rush to sell their stocks?
Not according to this analysis. In fact, they say that if the market dips because of worries about these tariffs, that could actually be good buying opportunity for investors who are in it for the long haul.
Oh, interesting.
They even brought up Warren Buffett's famous saying, "Be greedy when others are fearful."
Right.
The key advice they give is to focus on companies that are strong, have good profit margins, and can weather these kinds of changes, like how Walmart and Costco are expected to adapt over time.
So it's about looking at the bigger picture and focusing on those fundamentally sound companies rather than reacting to the initial market jitters about the tariffs.
Exactly. The article encourages investors to stay focused on those solid, well-managed businesses that can handle these shifts in global trade.
Okay, so to sum it all up for everyone listening, President Trump has announced these new tariffs that are going to be put in place very quickly. This month, there's a general 10% tariff on most imports, but things that meet the USMCA standards are exempt. Then there are those much higher tariffs for about 60 countries that are considered worst offenders, and China is facing a total of 54%.
Right.
And then on top of that, they're getting rid of the de minimis exemption, which will probably increase the cost of cheaper goods from places like Shein and Temu. But from an investment standpoint, the advice is to stay calm, focus on strong companies, and maybe even see any dips in the market as opportunities in the long run.
That's a great summary. It's a lot to take in, but hopefully this deep dive has helped you understand the basics of these new tariffs and what they could mean.
Yeah, for sure. And as a final thought for everyone, think about this. Besides what it means for our wallets and our investments, how could these tariffs and other policies like them really change how countries trade with each other? And how could they affect the choices businesses make about where they get their products from in the future?
It makes you think.
It's something that wasn't specifically addressed in the article, but it's definitely something to consider, based on what we've been talking about.
Yeah.
Thanks for joining us on the Deep Dive today.
Thanks for listening, everybody.